Important reminder that trading and investing can be extremely risky business. Therefore, it's your responsibility to evaluate any information, opinion, advice, or other content contained in this video. All right, so here is a chart of the ES on a 15-second bar level. So every one of these candlesticks is just 15 seconds of price action. Now, I had moved over the course of 2022 to be able to trade this time frame. So I still do my full analysis on the weekly, the daily, the 60-minute, and then come down and look at drives and price probes and spikes on the 3-minute. Now, when I saw the action coming into today's open, I saw that we were resting at this 50% retracement of this 60-minute down move, but I also saw that we had only done 2 drives up fully on this 60-minute chart, so there's room for a third drive. Now, I had a resistance, a support here at 3969.5, which was this old top. So coming to the 15-second chart here, if I draw in that 3969.5 just as a horizontal line, and I'll make it pink to go with my normal resistance and support colors, 3969.5, okay. So when the market opened, which was about here, so you can see this was the first bar that ended at 15 seconds past 9:30. So that would be the first bar into the open. I did see opportunities to go long here, but everything happened really fast. And because we were still just testing these lows and I knew there was this support down here, I wasn't confident in trading this move. So I missed trading that move and I beat myself up a little bit, but I also realized, better to wait for my levels and setups if that's what I need to do. So then I also saw all of this got chopped up. I had an idea to go long on the retracement into this price probe right here. Again, I didn't act on that one, and that also ended up being short-lived. Down here, I wanted to buy, actually. I saw this 15-second bullish divergence very close to the bull support power zone. Price made a lower low, but there was this higher trough and I just missed it. So I tried to buy 3975 and it just flew away. Now, the good thing is it flew away. And when it did, I realized that this is like a super, super volatile area. So I'm just going to kind of hang out for the next couple of minutes and see if I get more clarity. So then when the market came up and it started rolling over, at least I wasn't long. Now, I didn't go short. And looking back, I could have gone short based off of returning to this 15-second price spike within the context of bear domination on the 15-second chart. But this did not align with my bigger picture view for the 60-minute to trade higher. That's why I was a little hesitant about taking any short trades. Now, had I taken this short trade, you can see that would have been, a very fruitful move here. The thing is, the new trade management that I'm using on the 15-second chart, because on the 15-second chart, because it was so fast, I was using money stops. Like if a position made a certain amount of paper profit, I would move the stop and just keep ratcheting up that way. But I have decided now to shift to logical stops, and you'll see from the one trade I did, that is actually really fruitful here. So coming off of this high, if we had followed the lower price highs, then that trade would have been exited somewhere around here. So it would have been short from in this vicinity to exit it down here would have been a nice trade. Now, even though I missed that one, I at least sort of had the presence of mind to realize, hey, we are back at that old top. Now, on a 15-second chart, it would take a lot of squishing of the bars to see it, but I can do it. And now you can see, here it is. This is the old top, okay? Right there, 3969.5 top. So 3969.5, bringing that back here. Okay, so then I went long at, all right, so the power went out in the middle of me capturing this video, so I'm not quite sure where I left off, but we're gonna just proceed. Okay, so as I just explained, the market came to that old top, and when it held around there, so what happened is I did not have a resting order sitting at that level. I thought about it, but with the way this was falling, I would rather have some confirmation. So once I saw this little doji candle form, so I'm gonna try to zoom in so you can see a little bit more over the markings. So these markings here, this orders that you're seeing, these are automated markings on TradeStation. So if you turn on chart trading, that's what happens, and it can show you your trades, so it's helpful for review. So you can see I went long at 3969.5. This was at 940. And from there, was actually filled one tick below my desired entry because the market was so volatile, and that's fine. I got a better fill than I planned for. Again, reason being two things: that return to that old top as per Gann trading patterns, and the RSI power zones also being back at previous oversold levels. That kind of gave me confidence that if there's a bounce here like there was back here, it actually has legs to it. Okay, so per my trading plan, I exited at 2 points on the first contract. That's just an automatic thing I do to capture profit right away, and then the second contract is the runner. And you can see that runner lasted through all of this. Now, one could argue that you can exit, pull back, exit, pull back. For me, I was using my new approach of trailing based on actual logical data, price lows. So the trailing stop moved from here to here, then it moved to here, 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 and it was actually not tested because I had it 2 ticks below. So 71.5, market came down to 71.25, so my stop at 71 was not hit. And then there was this massive surge. Okay, all of these were bar lows, but because there was such a huge surge, when this bar low formed, I trailed the stop up beneath it to protect that profit. There's no reason to leave all that on the table. And then as soon as this new price low formed, I trailed the stop beneath that. So that was at 79, so I put my stop at 78.5, and here it is. That's the exit. So I think I got filled at 78.5. So all of that together is about 500 and change of profit. And you can see it was not even 10 o'clock yet. So that is how I traded today. I mean, there's just, not a lot of complicated stuff to it. What I'm doing is relatively simple, but putting in the trades, being ready for the trades, that's where all that prep time comes in. Think of how much prep and planning it takes to launch a rocket ship into space, right? Tons, hours, days, weeks, months. And the actual liftoff from the ground is relatively quick. That's how it is in trading. To make this trade that took 10 minutes, I prepared for 25 minutes, start at 9:05 a.m., and I observed the market for another 10 minutes before I even got a trade. And then that was that. Now I observed the rest of this action, and I had thought about taking action on a return again to an old top and the bull support power zone now on the 15 second. It was just moving a little faster than I was, and so I was missing it. So I tried to buy at 3978 at 957. I even tried to buy in this retracement, but it just flew away from my entry. And I knew with the market being as fast as it was, if I wasn't going to get my decent entry, that's okay. I'd rather just let the trade play out. And then you can see it did continue higher, and I practiced the management. So that's another important point. If you miss a trade that would have been as per your plan, because you missed it because you were, distracted, you missed it because you hesitated, you didn't believe in your signal, whatever it is, use that and turn it into a lesson. Go ahead and manage the trade on paper as if you'd taken it. So that's what I did. I said, okay, well, if I had gotten long on a return to this level here and managed this trade with my approach of using a logical stop on the 15-second chart, what would have happened, right? So I mapped it out. If I had gotten long as per the original, what would have been my management of the trade. I traced the steps along the way. So if I got long at 39.77, I would have been out at the first contract at 2 points. I would have been out at the next contract at 2.5 points. So it would have been a total of 4.5 points, which is not nothing. But it also shows me, okay, sometimes when you're not super fast, it's okay. It's just better to like not chase that trade down, let it go and move along. And then continue on. And then it was about 10:02 that I out loud said to myself, okay, I'm done trading. This $545 I got, I was like, that's good for today. I'm good. And let it go. And what's interesting is I stopped trading and then 10 minutes later, their power went out for a few minutes. So you got to listen to your gut. When your gut says, you know what, I'm done for today, it's usually kind of knows what's up. Now, it wouldn't have been the end of the world if my power went out when I had to trade on, but it would have been a little stressful. I would have had to call TradeStation, make sure my trade was being managed the way it needed to, etc. So yeah, there it is in a snapshot, how I traded, real, happening, showing you right after it's occurring. And yes, this is what my charts end up looking like a lot when I'm deploying various analysis. Sometimes there's even more. And remember, what you're seeing here is just the 15-second chart. I have other levels of analysis on the 3-minute, on the 60-minute, and so on. And I am looking at those as I'm doing this. I just want to be really clear here with what the 15-second chart is showing so you can understand how it's even possible to trade that fast of a time frame. Catch you next time.